Morning, everyone. We're going to go over setting up a chart of accounts, and this is necessary so that way when you put your transactions in, you know where they're going. This is somewhat arbitrary. It's not like critical that you get like the exact perfect chart of accounts. A lot of it's just seeing things the way you want to see it. So, like for instance, on these income categories, it's like okay, you got your service income. Billable expense income would be like if you're putting it on invoices, but you could change this to sales. It really is just kind of however you want to see it. Um, QuickBooks set this up as services because I set this up as an electrical company. So I'm just going to go through some basic accounts that you're going to want to add. First, we're going to add a couple of cost of goods sold accounts. So just go up here, and yeah, I got here by going all accounting, chart of accounts. So we're going to go to new account. We're going to do contract labor. You can also do subcontractor expense if you want to call it something different. And this is going to be cost of goods sold, cost of goods sold labor. That's fine. So save. We're going to do job materials, and supplies, cost of goods sold. This isn't labor. This is going to be like supplies and materials. Save. We'll do disposal fees, cost of goods sold, and this will just be like other cost of services. And those are kind of the big three. As you go along, if you spend money on something that maybe is directly related to the production of the income, then you can add it. Like actually, a fourth one I just thought of that people might have would be equipment rental. So the difference between cost of goods sold and a normal expense is that cost of goods sold is money spent that is directly related to the production of income. So if you're a carpenter and you go and you put in a door at someone's house, the door itself that you have to pay to replace it is going to be part of cost of goods sold because that's directly related to the production of income. The labor that you pay the guy to go over and do, that's directly related to the income, so that's going to be cost of goods sold. Whether it's wages because he's on your payroll or subcontractor expense or cost of labor. Whereas, the depreciation on the vehicle is not cost of goods sold. The um, tools, while it might seem like they're cost of goods sold, are not directly related. Those tools will be used on other jobs, so those are not cost of goods sold. Wages paid to an admin person would not be cost of goods sold. Advertising is not cost of goods sold. So just things that aren't directly related to the production of the income are not cost of goods sold. But you do want to track cost of goods sold separately than your other expenses. And these are, kind of the four big accounts that I see all the time. So I'm just showing you those ones. All right. So let's set up our expense accounts. Let's do auto expenses. So this would be, your gas, repairs and maintenance on your vehicle, auto insurance. Some people break all that down, like they'll have, a sub account for gas, they'll have a sub account for repairs and maintenance, a sub account for auto insurance. I don't really like doing that. I don't really see the point. I think it just makes your profit and loss longer than it needs to be. And you're not really going to use that information for any sort of decision making purposes. So I think it's better to make this simpler when you can. So auto is good. You can do bank service charges. So this would be like you get an overdraft fee at the bank, or you transfer money via wire transfer fees, or you overdraft your account, or you know anything like that. Bank service charges. Let's see, dues and subscriptions. And this, when you type in the name, this is just how you want to see it. You can put this however you want. The account type is kind of important. Obviously, if it's an expense, you want it to be an expense. And it'll display differently if it's cost of goods sold versus just expenses. So you do want to get those separated right. This category over here really isn't that important. I mean, this is only really used if you're going to be like mapping it to a tax return directly out of QuickBooks, which I just pick the category that makes the most sense just because why not? Let's see. If you ever give clients gifts, you could put that on there, but a lot of people don't, so I'm just going to exclude that. Insurance expense is a big one. Oh, yeah, I gotta finish setting this up. Fees. This would be like you're paying your accountant, you're paying an attorney for something. Fees. Meals and entertainment. I mean, entertainment's not even deductible at this point. It's just kind of, the way this account's been named for so long, that's just what I call it. I mean, a lot of people will break out meals and entertainment separately. Basically, just entertainment's not deductible. So if you have actual business entertainment, like you brought your employees to see a baseball game or something, that's not deductible. So maybe break that up. No one actually has entertainment expenses. It's usually meals, which would be, you stop and grab a box of Joe, and that's the difference for your employees in the morning. If you actually are someone who meets with clients and takes them out to dinner or coffee, that would count. You stopping at Wendy's and buying your lunch every day, even if you're working, is not a deductible business expense. Say office expenses. So some people will break out office expenses by like software, computer, internet. Yeah, I like to keep this as short and as simple as possible. So like your QuickBooks subscription would be office expenses, paper and pencils, printer, ink, any other softwares you use. I just put it all under office expenses. I will say like the one time I might not do that is if you have like substantial software expenses that are related to the production of income, then I might have a separate software expense. Like if you're a engineer and you have AutoCAD or something like that, maybe you have that listed separately because you track it separately. But like most people, it's like they've got a bunch of $15 a month subscription. And I just put office expense for simplicity. Parking and tolls is a good one. You actually separate parking and tolls from auto because if you're a sole proprietor and you choose to take the standard mileage deduction instead of actual auto expenses, parking and tolls is still a separate expense that you could take. So I like to separate parking and tolls from auto expenses. License and permits. This would be like, you got to pull permits from the town, or maybe you're like your licenses, like your contractor's license or something like that. I mean, they seem like kind of a goofy combo to pair, but a lot of people pair them and it's fine. So you could break it out separately if you want to, like, permits, licenses. If you wanted to have two separate accounts, you could do that. It's fine. Telephone expense, you're using a phone. Some people put this under utilities. That's fine. If you want to put it under utilities, like if you want to just have utilities expenses, that's cool. Yeah, this isn't like exact science. It doesn't have to be perfect. You can kind of set this up in a way that makes sense to you that you want to see this. But the list I'm kind of putting together here is a good place to start. Small tools and equipment. So this is like minor purchases. You know, you're not going out and buying a big, huge piece of equipment. This is like, excuse me, you're buying hammers, nail guns, screw guns, just, you know, small tools that you carry in your truck or whatever. If it was over 2,500, you'd actually put it on the balance sheet as a fixed asset. So you just do like equipment purchases and it would be a fixed asset, but I'm not going to go into that right now. Travel expenses. This would be like you're going out of town. You know, you're traveling further away to do a job. There's some rules behind this that, again, I'm not going to get into at the moment. Maybe I will later if that's something people care about. Continuing education, usually people have some sort of professional education that they have to stay up on top of to keep their licenses. So we'll just do other business expenses. If you don't meet like a category on that second little bar over there, you could just do like other business expenses. That's totally fine. Let's see. Did I put? Yeah, like I didn't put advertising on here. Yeah, that's a big one. Let's see. Repairs and maintenance. I don't break this out. Some people break this down between like buildings repairs and maintenance or equipment repairs and maintenance. You know, you got to fix your car. I mean, I usually put that as an auto expenses, but you got to repair something on the building. You have a big piece of equipment that breaks down that you got to repair. I just put it all under repairs and maintenance. It's fine. Um, some people will break those out. Again, I really try to keep everything as consolidated as possible. I just don't think that adding extra information is helpful. Rent. Expense. And again, I do put this separate. Like rent expense to me means like, hey, this is what I'm paying to rent my office or my building. Whereas like there's equipment repairs and maintenance or a rental, equipment rental, which I'm doing a job and I'm renting equipment. It's a different thing. Um, we're gonna do tax expenses. Most people's tax that they really honestly end up paying for their business that's deductible is just the corporate excise tax if you're an S corp and payroll taxes. But I typically will put payroll taxes along with payroll expenses, and we'll get to that in a minute. You might have other taxes you pay, and even like an excise tax for your car. I'll usually just put that under auto expense. You could put it under taxes. I think that's a pretty decent list right now. Oh, you know what? Interest. If you're paying any loans that are business related, you're going to have interest expense, interest paid. Yeah, I think that's a decent list for now. And then let me try to see if I can run a profit and loss, even though there's no data in here at the moment. See, I don't want an account type. I just want the accounts. I used to know how to do this. There used to be a way to just pick whether or not, yeah, here we go. And QuickBooks just moved all this around recently. So then you can see all of the accounts that you have are listed. You can see that these cost of goods sold accounts that we set up, contract labor, job materials, disposal fees, equipment rental, shows up separately. And this will be an important number because you want to make sure that your margins are correct. And your margins basically make a good thing for margins is they're making sure that you're charging enough money, right? So if you charge $1,000 for a job, and after you pay your people to do it, you pay a dumpster or bringing stuff to the dump, and you pay for all the materials for the job, they cost you $800, your margin's 20%. That's going to be tough to make money. So it's a good thing to know what your margins are. And then here's all your other accounts. Uncategorized expense is one that QuickBooks shows up with. I would try your very best not to have anything in uncategorized expense. This is just kind of a stupid account. I don't really like it. To me, that's a good indicator that like whoever's doing the books isn't doing a very good job if things are in uncategorized expense. Oh, there is another account I would actually add real quick. So let's go back to our chart of accounts. So this is actually an account that used to populate with QuickBooks automatically. And we'll do other expense for this one just so it's set aside. But this is basically an account that you will put questions for your accountant. Like, hey, I don't know how to categorize this. I don't know where it goes. I would park it here. I guess that uncategorized expense could be used for that, but it's typically, they're not used the same way in practice. So that's why I just don't really like that other account. So anyway, I think that's a good list, and I'll go back to the report and just kind of, again, give you a look of how that looks. I'll just show all the accounts. They're all zero right now. So yeah, you have your income, services is really the only one I would use. I wouldn't use uncategorized income, billable expense income. It's just complicating things. Your cost of goods sold accounts, and then here's all your other expenses, and at the end you'll have your net income. So this is how much money you've actually made. So that's a good overview on that. And then let's just look at a balance sheet real quick. A balance sheet is what you have minus what you owe, and that kind of gives you what's left over. So, and again, I'm trying not to make this too much of an accounting lesson, but this is kind of important to know if you're running a business. So yeah, here's my fake checking account that I created, uncategorized asset. I would try not to have anything here, but what you would have here is you'd have, the total amount of equipment. You just have like a equipment item. Maybe it just says equipment, and that's all the equipment you've bought. You'd have your vehicles here. Vehicles I like to list separately. So you've got a Ford F-150 that would be listed. Liabilities, current liability. Here's the fake Amex card I put on here. So whatever your balance is on the card should be reflected. Let's just say that F-150, you've got a loan on it. So you'd have like a notes payable for an F-150, and then you'd have the balance of that on here. Retained earnings is how much money rolls over from year to year. So your profit rolled over from year to year, or your losses rolled over from year to year, plus or minus how much money you've put into the business and how much money you've taken out of the business. So example would be, let's just say you put $10,000 into your business to start. The business makes $50,000. You take $15,000 worth of distributions throughout the year. You're going to have $45,000 in retained earnings. So, and right here, this is going to show up as net income. So let's say that 50 grand you made, it's going to show up as net income. And at the end of the year, it'll roll over into retained earnings. So you don't need to worry about that. Which that actually reminds me, let's see if there is an owner's equity account. This isn't really a P&L account, which is why I wasn't thinking about it. But you are going to have transactions where you transfer money to a personal account, or you're going to have transactions where you spend money for personal things that You shouldn't really try not to do that, but if you do, you got to have somewhere to put it. And so you're going to put it under owner's draw. So we'll set that account up real quick. So I set this up as a sole proprietorship, so owner's draw would be the name of the account. If it was an S corp, you could put shareholder distributions. They're the same account. They do the same thing. It's not important the name. So this is going to be equity, and you can do, yeah, like owner's equity is fine. So save. So let's just say you used the wrong card. You stopped and you went to the grocery store. You used the wrong card. Used your business card, and now you're saying that transaction hit your bank account. You're just going to put it as owner's draw, or you transfer money out of your account. That's going to be owner's draw. The other accounts I will set up now, I was thinking about doing in another video, but payroll expenses, if you are running payroll. So that's going to be an expense, payroll expenses, and then I like to have 3 sub-accounts for payroll expenses. So the first one would be officer salary. So this is, you being the officer of the business. This is any payroll that you run for yourself. And we're going to make this a sub-account of payroll expenses. I like to have a salary and wages, and so this is going to be what you pay everybody who's not you. And then you're going to have payroll taxes, and this is going to be the taxes that you have to pay as an employer. And again, I would make this a sub-account of payroll expenses. And that actually reminds me of another account that we should add that's not a direct payroll expense, and that is payroll processing fees. And this is going to be basically what you pay the payroll company. So if you're using Gusto, it's like $50 a month or something like that. So, and this will just be other business expenses. And we'll look at that profit and loss one more time. So then you should be able to see, here's our payroll expenses, officer salary, salary and wages, and payroll taxes. And I'll get into like how to break these out and another thing. So anyway, that'll do it for setting up the chart of accounts. Sorry if this video is a little all over the place. Trying to put this together as a tool for small business owners who are under, let's say 100K. I'm not a content creator, so just trying to make this helpful. Maybe I'll try to make another one and clean it up later, but for the time being, if you just follow what I did in this video, stop, make the accounts as I'm going through it, you should end up with a fairly decent chart of accounts and a pretty good start. So I guess I'll see you guys in the next video.